So hey guys, and welcome back to the channel, and today we're back with our monthly review of our Python algorithms. So we have 4 algorithms running live, and again there's 2 parts to this video. So one, we test the results of the algorithm for the past month, and then we have a review of the website. So the first one is the main one that we run, and it's basically just looking at Zacks is a website which provides ranking for stocks, and we look at all stocks that have rank 1 or 2, which is strong buy and buy. We buy them at the start of the month, sell them at the end of the month, and compare their results to the S&P. So you can see for this month the Zacks strategy has got a performance of 3%, whereas the S&P, crazy month for like nearly 7%, absolutely crazy with everything going on. So really bad underperformance, but overall on the long term you'll see when we go back to a website that this strategy has done well long term. So I'm not worried about it, and it was just a crazy month for the S&P, so can't do much about that. On to the 3 newer strategies now. The first one is the earnings one. So to quickly explain this one, it's again stocks that are rank 1 and 2, so strong buy or buy only, and then the only thing we add is that their EPS percentage has to be bigger than 0. What is EPS percentage? It means that analysts covering the stocks think that this stock has a higher percentage chance of beating earnings than not. Again, this has to be, I guess you have to be a bit careful with this strategy, because even if a stock beats earnings, especially nowadays, like there's so many expectations that a stock can beat earnings by quite a lot, and still it's not like to the highest point of expectations, still go down. But that's the general strategy, right? If a stock is predicted to beat earnings, and if it's a strong stock, then buy before earnings and sell it after earnings. So that's what we do. In the code here, you just see, it has to be between the dates that we choose. So this lag back of 1 month. So the S&P for this strategy and all the sub strategies did 4%. Just as a comparison, it's like back 1 month, so it's from March to April, and then it has to be future earnings, so we buy before the earnings and sell after the earnings, because there's also an earnings reversal strategy. This is the EPS percentage bigger than 0, and then this is just ensuring no look ahead bias. We're buying before earnings. So you can see for the month of March to April, again it's like back by 1 month. The stocks it chose are these, so you can see not a lot. I think MU, is that Micron? I think it's Micron maybe. Then Johnson & Johnson, don't know all of these, but quite a small amount of stocks. Again, earnings season was this month, this one is lagged back 2 months, and you can see the performance is quite good, but quite a small sample size for this month. But 6%, the S&P did 4% in that month, remember, it's lagged back. So the dividend strat is our third strategy. Again, looking at only stocks with the 1 or 2 buy, and then the only other filter is that the dividend yield, it has to be bigger than 2%, because you don't want tiny stocks. And then how the strategy works is basically the dividend capture strategy. So you buy a stock before it goes X, and then you sell it you sell it 1 month after. So the strategy is basically buy before X, then on its X date it will drop by the dividend yield, but then over the next month you're hoping that the stock will go back higher than what it dropped down on its X date, basically. So this is called the dividend capture strategy. Mixed reviews in literature, it doesn't work, sometimes it does. And again, this holding no transaction costs or dividend taxes or anything, and we'll evaluate it now. So again, just going through the filters in Python for you guys. If you want to implement this yourself, just 1 and 2. So again, strong stocks, again it needs to be between that month period that we're looking at, and then the other thing is that the dividend X date needs to be again within that month. The yield needs to be bigger than 2, and then there should be one more filter, I think. Div X date has X date. Let me see, I'm just trying to think. No, that's it. You just buy before the X date and then sell after X date. The yield has to be bigger than 2, and the stock has to be either 1 or 2 in the Zacks rank. And you can see this is a bigger sample, but still quite small. You can see some stocks that I guess Cisco, any others I need. Washington Bancorp, I think. Don't really know too many of these, but all the Gladstone, Landstone, all of that. And you can see its performance again beating the S&P, which is 6.84%. This is a huge return, by the way, for dividend strategy. It includes the dividend amount. So you buy before X date, you receive the dividend, and you sell in a month. So 6.84%, you can't complain compared to S&P's 4%. And then finally, the earnings reversal strategy. This again, as I say every time, it's not implemented how literature wants it to be implemented. implemented. So there's been a ton of papers on this, that it's a viable strategy. Basically, when the stock beats earnings but goes down on the earnings day, it's normally an overreaction. So what literature has done, and there's been a lot of studies on this, is that once the stock has beat earnings but dropped, you wait a bit and then you buy it at its low point, and over the next month the stock will gradually return to what its price should be, because they're overreacting, right? The stock beat earnings, there's no reason for it to go down unless there's bad guidance, of course. But again, that's something we don't have in the data. So yeah, that's the strategy. And for this one, because it was done in literature, we don't look at strong stocks, we don't care about the rank. We look at 1, 2, but even 3 hold, 4 sell, and 5 strong sell. We don't care about the rank. You can see I commented that out because we used to have it, but yeah, we follow the literature completely. The only thing we don't follow in literature is here, we're buying stocks that beat earnings. So if a stock beats earnings and goes like up 100%, we would still buy it, right? So that's not how literature wants it to be implemented. So we need to add another filter of, has the stock gone down compared to its prior earnings price, but we haven't implemented this. So this is sort of a crude strategy of just buying all stocks that beat earnings, but of course this can be changed in the future. And then yeah, the only other filters we apply is that, of course, the surprise has to be non-NA, because sometimes the Nasdaq API has some NA. Well, it has for quite a lot of like the smaller stocks, it doesn't receive the data immediately. The surprise has to be bigger than 0, so the stock has to have beat earnings. It has to be between the start and the end date. Again, we're always looking at 1 month period. And then yeah, the last thing we should be looking at is past earnings. So we're looking at a stock that has posted earnings, not before stock, so you buy only after the stock has posted earnings. And yeah, this is huge sample size, because again, we're not filtering to the quite elusive strong stocks of rank 1 and 2, and this one is our strongest algorithm for this month of March to April, and it had a 9% return compared to, again, the S&P was 4% for that month. It's like back 1 month compared to the main strategy. That's the only one that is run well, the backtest can be run live basically. So yeah, that's it for the algorithm side. Now moving on to the website, you can see this is the old website, so it has all of last month's performance. Again, the earnings strategy, this one, and then the main strategies are the only ones that are currently beating their baselines. But if we refresh every 15th, it refreshes, and you can see the new update. So yeah, the S&P again, crazy month compared to our own, which is a bit more tame, still positive, and we're still beating the S&P by around 15% in over 2.5 years now, I believe. Was it 1.5 years? Wait, January. Yeah, 2.5 years of backtesting, and then the 3 newer strategies. Again, dividend one underperforming, but this expected. This meant to be a more passive strategy. Then the earnings on this one, I have a lot of belief in. That is still beating the S&P, so that's good to see. And even the earnings reversal, which isn't implemented correctly as per literature, we're just buying all stocks that beat earnings, is quite close to its baseline now. So yeah, this is the update for all our 4 algorithms. You can see if we just remove the S&P performance, I mean, that's just a great equity curve, right? Except for this sort of tariff month, I believe. It's just looking beautiful. So yeah, that's the update. Also, another update is that my last exam for university is next week, so I'll finally be able to get us off 4.1, because there's been a lot of feature requests I just haven't implemented due to how busy I am. And then the last thing to say is that, so we provide all the stocks that we buy at the start of the month for free in, no, it's not this, it's Best Stocks Out 6000, and you can see I haven't updated this yet, so it updates every 15th. This one is not run live, so it scrapes Zacks once per month, not live. And I look at all stocks out again, as I said, rank 1 or 2, and then I put them for free. So yeah, go to the website probably end of today, definitely by Saturday. On the weekend it will be here, but currently these are all the stocks for the past month. And then again, just to remind you, if you want the live Zacks rank, so let's see if we can get an example here. So VICR, WEX, they were both, what rank were they? Yeah, 1 and 2. Let's see if their rank has changed compared to last month. So VICR, WEX, and I see, so this is the live Zacks rank. Okay, so VICR is still, okay, they're still strong buy. But yeah, I mean, Zacks rank, it only changes if it needs to, right? The other thing we can see to prove that it's live is, EPS 4.7, growth percentage 8.2. And then this, yeah, you can see the growth percentage change and the APS percentage change. So this is a live rank, but every month we provide all the stocks our algorithm chooses through Python for free here. And it says it on the little information sheet here. Yeah, you can see it hasn't been updated, so it'll be updated today or tomorrow, but I'm running the sort of scraping backlog, I guess, locally, and I'll update it by today. So check that out when you want to, and yeah, hopefully next month we keep beating the S&P on most of our strategies, because this month only the main strategy failed, but all the other strategies beat their baseline. So yeah, stay tuned for next month's update, and normally I'll be able to do some let me just show you the features that people wanted. So let me sign into my test account. So the main feature will be adding, because my university ends and I have about 2 or maybe even 4 months before my new job starts, but this goes to Trading 212 API. All of this works well. I don't have pending transactions on my practice account. This is the heat map, again, completely different to Trading 212. You can get it for different time periods, which is really cool, right? And let me see for one day, because I think Nvidia is down. I'm currently shorting Nvidia. Okay, nice. That's very nice of me. And then yeah, this dividends part is going to be the next big feature. But yeah, stay tuned for that. We'll be implementing that soon. And again, next month we'll be updating the website. If you have any feature requests, comment down below. But yeah, stay tuned for next month. I'll see you then. Again, comment down below. Any thoughts, any ideas, any sort of feature requests for the website, anything basically.